The proxy battle, meanwhile, between Pershing Square's Bill Ackman and payrolls processor ADP is in its final week. The shareholder meeting next Tuesday. In a new twist, ADP now says it plans to file a complaint with the Securities and Exchange Commission, alleging Ackman made false and misleading statements to a shareholder advisory company, which then ended up mainly supporting the Ackman position. This all as he fights for 3 seats on ADP's board, including one for himself. Ackman says ADP hasn't learned the lessons of the likes of, say, a Kodak or maybe even an IBM, and is losing ground to smaller, more innovative competitors. This among other arguments he makes. He also says he has a strategy to increase margins by as many as 1,200 basis points, and this over just 3 years. Bill Ackman joins me now. Thanks for joining.
Sure.
What do you want shareholders to vote this week? Literally 5 business days left to make up their minds. Do you want a full slate, 3 board members, including yourself, or would something less be a win?
Yeah, so we're not seeking a full slate. We're seeking 3 directors on a board of 10. So it's a minority slate. We certainly love all 3 to be elected, and we think that would help recast the board and change the culture in the boardroom, which we think would be helpful. But I think in light of how hard the company's fought back, the latest, as you mentioned, accusation, I think it's a huge win for us to get on the board. We were certainly the underdogs at the beginning of the contest, and I think we're in a good place going into the election.
So 1 person on the board, which would be yourself, that would be a complete win for you?
No question it would be a win. It's not a complete win because we have 2 other very talented directors, Ronnie Hagan and Paul Unruh, I think can add a lot of value. And one of the benefits we bring by adding 3 directors is we replace the 3 longest standing members of the board. And there are a lot of actually very good directors that joined the board in the last 3 years, but they're newbies. They haven't gotten their feet solidly in the sand, if you will, and they can't, it's harder for them to challenge the status quo. But with a change in the board, if we replace the chairman, I'm seeking to replace John Jones, the chairman, 2 other directors on the board, you'll now have 3 committee chairs will have to be redone. And that recasts the board and enables the board to operate like a new board.
Okay, I could throw out some statistics, and I will. Why not? About ADP being a great company for shareholders, growing a dividend by what, 45, over 45 years.
All those things are true.
Yep.
It's a great company.
Yeah, a great company. So why then, attack it in this particular way? If you're so enamored of the company, why not take a position in it and casually suggest some potential changes as opposed to going all out and waging war?
Yeah, so we're not waging war. And in fact, we've stayed away from ad hominem attacks. We've stayed away from the kind of accusations that the company, has made against us. We've focused on the core issues, and the core issues is this is a great company, but that's really looking backwards. And the company has fallen behind competitors. It's lost major market share in the enterprise market. This is for companies with 1,000 or more employees. Companies like Workday, Ultimate Software, Ceridian, and others have taken away a lot of share from the company. That's really not, for a company with as much financial resources and the strong market position that ADP has had, to allow these new entrants to take away your, customers who've been with you for a decade or more. It's not a good thing. That's the first. And the second component is that the company has about 20% margins, about 60%. They could be 60% higher than where they are now, and just basic reorganizing the structure of the business. This is a company that operates with a very old-fashioned organizational structure. Too many layers of management, 130 offices around the country, inefficient procurement, everything from buying office supplies to dealing with the company's suppliers. These are things that can be fixed, but you can't do them by making light suggestions. The culture of this company is very ingrained, and our goal was to meet with the board, to convince them of this privately, as we have in a number of other circumstances, and then get a couple seats on the board and work with the company. They forced us into a proxy contest, and that's why we are where we are.
I want to ask you about your first point, the competition. You say that it's losing a lot of competitors. The company would suggest that the churn is perhaps about 10% maximum, that they have retention of maybe 90%.
Yeah, it's a misleading statistic, and the company's giving you the overall statistics for the company.
Which is what, in fairness, shareholders own. They own the overall company.
But that masks the performance of the enterprise business. So the reality is that in the enterprise segment, ADP is keeping the payroll account for many of these clients because the competitors like Workday are not able to do global payroll, and they rely on ADP to partner with them. But the very valuable part of the business is the so-called human capital management part of the business. That's where the growth is, that's where the profits are, that's where the revenues are, and that's the business that the company is losing. And what the company has done is it's reduced its disclosures to investors to mask the fact that they are losing a large number of clients in their enterprise space. They give you the consolidated numbers. I'll just give you an example of something that's misleading. Is they tell you how many clients they have each year, and that number has grown. But the reason why it's grown is that the small business segment is growing, but they're losing the big customers. And you lose one big customer, it's equivalent of a couple hundred small customers.
In fairness, they have been making changes, and those changes have come, originally in the smaller and the medium-sized enterprises. They, I would imagine, would argue that they're getting to the larger enterprise and that you don't fully know what their plan is. I spoke to the CEO of ADP, Carlos Rodriguez, maybe a week or 10 days ago, and just have a listen to what he had to say.
We obviously have a different idea about the pace and the risk that's involved in moving as quickly and as aggressively, I think, as Bill is suggesting. He's had some prior experiences with some other companies like Valiant and JCPenney where the risk-reward ratio obviously was tilted in the wrong direction, and we just want to make sure that we don't make the same mistakes here at ADP.
Okay, we'll get to the Valiant thing in a minute, and but the risk reward is fair. I mean, Carlos Rodriguez says he will improve margins by 500 basis points over the next 5 years. You say maybe as many as 1,200 over the next 3. If I'm a shareholder, why roll the dice on you when he's looking to give me some good value back?
I'm not seeking to be CEO of the company. What we're seeking to do is to add 1, 2, or 3 directors to the board of the company. That will change the minority of the board. It will bring onto the board people with business transformation experience, operational efficiency experience. These are skill sets that are not present on the board of directors. Also send a message to the company that the status quo is not adequate. The company has not, despite this 500 basis point comment that they've been throwing around, this is not in their plan. The only plan the company has released is they've given guidance for the next 3 years. And they say in 3 years, they expect margins to expand from 20% to 21%. Or a max of 22%. So 1 to 2 percentage point increase over 3 years. It's completely inadequate, and they should be showing a lot more progress if in fact, the reality is they have, for the small customer and sort of the medium-sized customer, they have migrated that client onto more modern systems, but they're not promising or delivering any operational benefits from that. And our additions to the board will send a message to the board that the status quo is inadequate.
What kind of a message does it send to the board, though, to put the company through an expensive proxy battle? Why not continue to talk to them for the next year, and then if maybe next year you still feel the same way, engage in a proxy battle then? Yeah,
again, our choice here was first choice was not to run a proxy contest. I haven't run a proxy contest for board seats in a situation like this since Canadian Pacific, which was more than 5 years ago. We asked the company for a 1-week extension to the nominating deadline so we could meet with the full board. They weren't willing to grant it to us, which is why we put up a slate of directors. We then had an opportunity to meet with the board. We proposed various settlements with the company where our directors would be added to the board. We said, look, if you don't like our candidates, we're open to other candidates. But they gave us a flat no. They chose this course. I let them know at the very beginning it would be distracting. They knew it when they chose this course of action. I do think it's a very healthy thing for the company. And what's happened over the past 2 months is that the shareholders have really been educated about elements of the business that they didn't know. There is I would say 90+% of the shareholders, and this is based on survey and other results, are supportive of the notion that this business could be doing better, could have substantially higher margins than what they're delivering.
You're talking about the Lisa Ellis-Bernstein survey?
The Lisa survey is kind of a good example, but we went out talking to shareholders. No one is arguing against that this company is no one is arguing against making this a more efficient and more effectively run business. No one. In fact, the CEO is now claiming that he agrees with us. At the beginning, he said that we didn't know what we were talking about. I mean, again, compare his statements 2 months in.
And they have changed some board members, and they would say Bill Reddy has, the PayPal experience.
We're not seeking to replace Bill Reddy. We're not running against the technology directors. The company's added some very good directors in the last 3 years. We like them. We think they're terrific. The problem is they're new to the board, and all of the power in the board is controlled by the legacy old-timers, if you will. So there are directors like John Jones has been on the board for 12 years. He's an industrial CEO. He ran a company called Air Products, which was not an efficiently run company. We were able to step into Air Products and make it a more efficiently run business. I think half the reason why we're in a proxy contest is Mr. Jones was embarrassed by what happened at Air Products, and he doesn't want it to happen here at ADP. What we find sometimes is you enter a proxy contest because a board doesn't want the business to be fixed so quickly because they think it's somehow a negative reflection on the way they governed the company when they were in the boardroom.
Well, I'm not sure that the way the stock price has been appreciating over the last number of years, and that people have too many comments about ADP as a company, or complaints, I should say, about ADP as a company.
Well, let me address that, okay? Because the company stock is up 141% over the last 6 years. Again, taking before the increase in price as a result of our involvement. The competitors are up 191% over the same period.
Speaking of competitors, which competitors exactly?
This is including Paychex, Workday, a composite of their competitors.
But that's the thing. It's a composite of segments, business segments. ADP does it all. Paychex does a portion.
Right.
They're up maybe a little more than ADP, but right. I'm not sure you're comparing apples to apples in that argument.
We are, in fact, doing that because the competitors compete against ADP in every segment of the business. And when you benchmark a company, you benchmark it against the competitor set. And what ADP has done is they kind of cherry pick competitors. Like they say IBM competes with them. And so the IBM is a major factor in their comparative set. IBM does not compete with ADP. When ADP salespeople go out, they're competing against Workday, they're competing against Ultimate, they're competing against Ceridian, they're not competing against IBM. If you do it correctly, and by the way, Glass Lewis, an independent proxy firm, did a proper comparison and found that ADP overstated the total return to shareholders and understated the return of the comparative set.
All right. You get on the board, shareholders vote you in. There's 28% of shareholders are retail shareholders. You have been reaching out to them. Let's say you've done your job and you get your seat, one seat. What makes you think that even given no impedance from the board and all your ideas, all of them, including the acquisition target that you have for the company, they all go through, what makes you think the value of the company will go up?
Sure. So the interesting opportunity here is it's great business. It's in a great sector. The economy seems to be doing well. That's a nice little macro tailwind. Interest rates are likely to rise, certainly with improved growth in the economy. ADP benefits with rising interest rates. ADP benefits with the favorable macro environment. So you've got a nice setup. If you add on to that the opportunity to take margins from 20% to 32% over the next 4 and 5 years, that's a great investment story for shareholders. If you can accelerate the growth of the business by fixing the enterprise segment, right? Their revenues are down in their enterprise business 10% over the last 6 years, in an industry that's grown enormously. So over the period that Workday went from a startup to a IPO to a $22 billion market cap, ADP's revenues in the enterprise business is down 10%. So the notion that the company is keeping pace with where they were, is just frankly not true. And that, if we can fix that, and we have a couple of ideas for how to fix it, among them, we think the company needs to carefully consider acquiring one of the competitors, because once you lose a customer in the enterprise business, you're not getting that customer back for a decade or more.
What makes you think you can convince the board? If you have one seat, that does not make a board decision for you.
Yes, and that's the important thing here. We're not seeking control of the company. We don't need control of the company. We just need to get some new ideas and some fresh ideas in the boardroom.
So
I'm happy to answer your question, but you got to allow me to answer the question.
But they have those ideas, though, already.
Okay, well, again, I can be a pretty effective director. I have the benefit of owning, on behalf of investors that own $2.6 billion of stock in the company. And we'll have the benefit of inside information. Today, all the ideas we have are based on due diligence we've done, but we've been limited to public information. If I join the board of the company, I'll get access to every piece of information that I want. For example, all the segment data on all the various segments. I'll be able to see precisely where the company is underperforming. I'll get an org chart. I think I can work with the board, and again, I can only be effective as one director here, but I can convince the rest of the board to take a very hard look at their cost structure, take a very hard look at their organizational structure, take a hard look at their incentives, and I believe the facts will confirm the arguments we've made from outside the company. And we'll get to the right answer with myself and ideally our other two candidates in the mix, part of the conversation, focused on what's in the best interest of shareholders. And one of the key things that's been missing in this boardroom is a shareholder. These are a group of professional directors. They're all good human beings. I'm sure they're all perfectly intelligent, but none of them, in 13 years, only one director's bought a stock in the company. It's not a board of people. It's not a board of owners.
Okay, but
there
that
needs to be
whole
an owner
argument, we could have a whole other discussion about that whole argument, because there are deferred shares.
Let's do it.
Well, I have other things I'd rather talk about. If you don't mind, we'll do it next time. But you talked there about the idea that you have, that you'd have sway, that you'd see.
No, I don't sway. Okay, well, when are the accurate arguments? Okay, if I make a compelling argument as a director based on the facts, I expect the other directors to listen and think about them. I'll be one voice out of 10.
Good.
But with one voice out of 10, the other benefit I bring to this board is I have a team behind me. So we have I think we've been complimented as recently on the call this morning by analysts about the spotlight we've shown on the company and all the insights we've developed. Imagine how much work we can do. We have perfect access to information from the companies. When I join a board of a company, I join with a full team behind me that provides analytical resources to the other directors.
Bill, is it trading too richly at 30 times earnings?
It is if the company's not going to make changes to its business.
And why would you buy it at 30 times earnings?
We bought it at 25 times earnings.
Okay.
The stock is up about $20 since we've been a shareholder of the company. That's driven by the market's expectation that things are going to change. And if we can, yes, the stock is overvalued if the company operates according to the status quo. But if the shareholders vote me on the board, vote our other candidates on the board, this is going to be a different company going forward. It's going to become a more profitable company. It's going to become a more efficient company. And it's going to have products the sales force can sell. You can have the best sales force in the world, but if you don't have a competitive product, it doesn't matter how good your sales force is.
You know, I want to get on and talk about another couple of stocks, and to get back to the nastiness as well. I mean, this did get a little nasty, and you even heard in the quote there, they brought up Valiant, and Herbalife has been brought up, and so forth.
We've made 35 activist investments. We've had a few disappointments. Valiant was not an activist investment; it was a passive one, and we stepped in after the stock crashed.
Would you ever want back in? Do you regret dumping out of it where it is now? Other people are back in. Paulson.
Look, I think Valiant's a good company. I helped recruit Joe Papa, who I think is a superb leader for that business. I think they've got the right strategy. They've got a tough hand, and we did our best to help stabilize that company after the crash. Again, I was not part of the decision-making process that led to the collapse of the company. I made the mistake of being a passive investor, which I won't do again. But I like the business, and I'm rooting for them.
Would you get back in? Are you thinking about it?
No, I've had my fill of pharmaceuticals.
You're back, in a manner of speaking.
Yes.
You're back in Herbalife.
Oh, we've stayed short Herbalife. Actually, the development that I mentioned today, we disclosed today, is we had a short position in the common stock of the company. That exposes us to the risk of a growing liability as the stock price rises. We converted the entire position into a put option. What that means is we have the same upside as we did before when we were short the stock, but our exposure is limited to 3% of our capital, which makes it a much more interesting investment from an asymmetric point of view. Less downside, a lot more upside.
We're out of time, but rapid fire round. Does Chipotle need a new CEO?
I think it's a great company. Obviously, I'm not on the board of the company, so I'm not part of that decision.
But would you want to, as a shareholder, a new CEO? The stock is down 30%.
No. I think the board will figure out, along with management, how to make this a better and more effective company.
Is Mondelez still an attractive target?
We like Mondelez. We think it's a great business. We think it's an extremely cheap stock, and I think it's a great acquisition candidate for someone. But I also think it's attractive as a standalone company. It's one of the cheapest, highest quality businesses in the packaged food space.
I have to ask you about the 2 and 20 model. We have 10 seconds literally, but are you in the hedge fund industry making the same mistake as you say ADP is making, that it's an old model, it's dead, and you need to innovate and
Yeah, we have innovated, for sure. We are not structured as your typical hedge fund. Large base of our capital is in a public investment holding company.